Good morning, January 30th, 2020, Thursday. The markets are going to be moving rather fast today. Officially, as explained in the video posted after market hours yesterday, we did get a move 9. Move 9 is a characteristic of a shift in behavior in the market after it's been going in one direction substantially higher. This is officially a breaking down point on the charts of any type of index in many individual stocks that you can identify and pinpoint pretty much down to an hour. So basically what we're saying, the markets are on the edge of a cliff. Tesla is a great short this morning, guys. We're going to review the trade briefly, but as explained yesterday, Tesla actually is giving us a sign that the market is about to crash because it's got a negative beta in relation to the market. I explained that yesterday. Review that video if you haven't. So basically, that's just an extra bearish sign, the fact that Tesla is actually moving high. Now, Apple and Facebook, tech reversal. Goldman Sachs signifies financial reversal. So we've got tech and financials reversing. Very interesting. We're noticing a very, very strong downtrend in the healthcare stocks. So we want to continue shorting them. Yesterday, it was an easy trade on Anthem, ANTM, guys. Quick and easy trade, basically in and out. Like $10, $12 drop happened literally within minutes, and it revisited the lows of the day. So all the healthcare stocks are likely to continue to drop. The top of the line trading stock for trading healthcare today is ILMN. We're going to break that trade down. Noticing divergence between S&P and VIX. We're going to cover that. BKNG puts on any bounce. Actually, I forgot to type a bunch of ticker symbols we are going to review in this video. So here it is, guys. The most important thing you should understand how to trade today. We're likely to get, after this move 9 yesterday, we're likely to get 2 consecutive 3 moves back to back. So you definitely want to swing trade, guys. If you got a small account and you're like, man, how do I grow it? This is the opportunity for you to grow your small account. The only thing you have to absolutely understand, that you have to keep your positions overnight. This type of market environment, they can escalate to the downside rather fast. So we're gapping down pre-market. No surprise here. We've outlined all the reasons why in the last few videos, and particularly a specific video we posted last night. Now, the market is struggling right now. Pre-market is 32.52, 32.48 area. Expect a bounce to 32.60, 32.63, followed by a reversal. So expect this bounce. So don't necessarily just jump in unless certain earnings is what you're focusing on today. If you're trading the market like the SPY, the Qs, and so on, you want to focus on this, right? So a couple of attempts to go lower, bounce higher, followed by a reversal. So first 45 minutes, still expect the reversal, still expect the bulls to come in and try to make this last attempt to actually pull the market a little bit higher. After that, it's pretty much gradual sell-off throughout the day. You're going to see this type of trend is pretty much all technical move 3s are going to perform. Now, as far as tomorrow, it's important to understand why you would want to keep your positions overnight. There's going to be another gap down. So these are the levels. They may not be down precise down to a T, but you kind of want to go plus minus a few points off these. So 32.60, 32.63, that's your entry. You want to play the drop, collect profits, get in on the bounce all the way to 31.81. It's going to be followed by the last bounce in the day to about 31.99. So that's roughly about a 60-point play right here. We're gapping down tomorrow to about 31.52. So between where we are tracking to open so far and between where we're looking like we could keep gapping down by tomorrow, it's about 100 points, guys. And ultimately tomorrow, Friday, by 4 p.m., we could be at 31.31. So that's your game plan. That's your playbook for trading today, January 30th, and tomorrow, January 31st. Yesterday, this is a slide from yesterday, guys. This is the divergence, right? So S&P on the way higher hits this level on January 15th. Yesterday it trades at the same level, but there's one major shift. Even though it looks like nothing's happening in this chart, there's a whole lot of stuff happening on the VIX chart. So when you combine the point on the VIX on January 15th and yesterday, January 29th, it gives you a totally different picture. It really signifies the shift in the market behavior, especially when it's confirmed by the move 9 and a whole lot of other things. You definitely want to pay attention to that. So we've basically identified that in the prior crashes, if we take a look at Hong Kong Stock Exchange, it's been a leading indicator what's about to happen here in the US. So yesterday, it gapped down on the 29th. Well, guess what's happening this morning, guys? Pre-market, it gaps down again. Another 700 points. So hold on. Hong Kong is losing 1,500 points in like less than 48 hours. Like, this is something to be paying attention to, because at this rate, it could be going all the way to 25. Let's say it doesn't. Let's stops out at 26, guys. I mean, we're close to 26 already this morning. Like, what's going on, guys? Markets are unwinding fast. It is going to play a negative impact here in the United States. The shift that we've identified last Thursday that caused us to get extra bearish, predicting all these market crashes coming up and stuff like that, is actually been highly, highly accurate. So this indication is something nobody was paying attention to because the markets was moving higher that day. Instead of a 7, we got a break in the pattern of 7s. We got a 4. And we also, at the same time, got a pattern while the market was moving higher. VIX was going higher while it was supposed to fall. This was the third day down on the VIX, third day up, on the VIX, which predicted this continuation pattern of VIX breaking out, moving higher. So at this point today, we're going to have a move 3 with a behavior of a move 11. Like, in other words, just because it's a move 3 and the market is crashing and dropping, don't expect that it's just going to do it in a straight line. It's going to pop intraday at a certain point, creating this move 11 variation. It's going to drop lower. So basically 3 with an 11 behavior, and tomorrow again 3 with an 11 behavior is what we're expecting. So if you position yourself properly, guys, this is an awesome swing trading opportunity. Apple shares are reversing. They're down pre-market again after hitting that level yesterday. That level of 327, 328, guys. If you're day trading, you got a day trading account set up, these are easy trades. You can trade them multiple times throughout the day. Goldman Sachs reversal candle, likely to drop further. Facebook, all the way at the top, dropping. Guys, these are just all signs of a top divergence between Tesla and Facebook. All the details were stated in the video. So at this point, guys, we are here. We're officially here on our historic analog. Damn it, look at this. So we're about to head for this type of formation right here. So tomorrow could be this big red candle right here. So today could be this third. 1, 2, the third one. Tomorrow could be this. Monday could be a huge day down. So we haven't been talking Monday, but guys, you want to position yourself for a big Monday drop as well. All the earnings plays, guys, this is the way you want to play Tesla, okay? Hopefully you paid close attention to the video I've sent. Yesterday I said, hey, buy a little bit of heavy earnings and buy a bunch when the stock opens today. So on the put side, okay, we're not expecting the stock to maintain the 650 level. Right now, it trades pre-market 629, so expect to bounce to maybe 640, but I wouldn't wait for this. I'd go ahead and buy some 600 strike puts in the event the stock could easily reach 587 by the end of the day, possibly 560, as indicated in the video posted yesterday. Now, there's two very important charts I want you guys to take a look at. They have to deal with the healthcare sector, and they tell us exactly how to play ILMN stock today. So yesterday, Anthem, you see gap down 1, gap down 2, highly bearish, strong volume, bearish crossover, bearish accumulation distribution. ISRG reported earnings not so long ago. Same thing, middle finger action, double top, gap down. Okay, all of these characteristics are expected to be seen in the way ILMN is going to be trading today. Target level on ILMN should be about 280, 270. If you can see on this chart, you got multiple double finger action going on. Middle finger action, basically, guys, is when your sell-off volume stands out in relation to the buy volume. As you can see, we got multiple instances of this, which ultimately lead to a severe drops in stocks. You got head and shoulder pattern. You got a whole lot of stuff here on the charts, guys. What you want to do is simply buy ILMN 300, 295, 290 puts at the open, nice and simple, very easy trade. Now, ServiceNow, double top, very similar formation. The stock could easily reverse a lot of its gains, so we want to short this one at the top as it bounces into the 340 level. When the market opens, you want to target probably about a $12 to $16 drop on the reversal side. Now, this move could intensify, and we could see the stock actually like under 310. So this could be a $30, $40 move. LRCX, guys, multiple divergences here. The stock is up on actually really good earnings report. That's not likely to hold, so we want to buy LRCX 320, 315 puts. You want to come in right here at about 320, 321 when it trades over here. You want to target an exit point, first point of 308. And the second exit point is going to be all the way down right here to 293. Yesterday, January 29th, Wednesday, after the Federal Reserve announced the decision, the market created a move. So here's how Move 9 actually looks on the chart right here, guys. You got basically a little bit of fear going on when the market opens. Then market picks up its equilibrium. The real action starts about 2:35 p.m. as posted in the video yesterday. 2 p.m. market spikes higher, drops, creates another bounce, and drops. That's a perfect Move 9 formation right there, indicating the shift and further drops in the market. 2-day sequence 7-9. This is how it looks on the chart. If you take a closer look, here's your 7, here's your 9. Overall, if you combine this action 7-9, it becomes an 11 on a 2-day overall broader scale. So 5-day sequence is 4, 2, 3, 7, 9. And basically, even though it looks like the market is not going so far pre-market as low as it was yesterday, the next move is lower. So we can get quick bounce, followed by a bigger drop lower is what's coming up today. So today is going to be market move 3, guys. VIX regains its posture 100%, creates a higher close yesterday in relation to the prior day, breaking out above 18, 17 level pre-market as indicated in the prior couple of videos. VIX was going to make a small undershoot and rocket higher from there. That's exactly what's taking place. So everything that we've talked about in the last few videos, guys, is basically here. The only thing that you can do now is take action, target the bounces, guys. The biggest key takeaway is short stocks intraday on bounces. You do that, you're going to be very happy that you did. Let's rock. Make it awesome trade day. I'll catch you on the next trade tomorrow.